Greetings, market rebels. Welcome to this week's macro measure video combined with our sector situation video. It is Thursday, July 3rd, 2025. I'm so used to doing these on Fridays. But anyway, it's we're closed for the week now and we're going to get right into it. I'll just say it a second time probably from earlier today, but hope everyone has a wonderful and safe holiday weekend, long holiday weekend. Here's Market Rebellion's trusty disclaimer. Here's Market Rebellion's trusty intellectual property rights notice. And here's just a brief review, very brief review of last week of things maybe worth mentioning. We we've had these positive driver discussion with so many things, and really the only negative thing we could really come up with on the other side are probably the Fed is behind the curve. That's something we've been talking about for a while, and the expectations are, though, that we'll see lower rates and rate cuts happening in the not too distant future. So hopefully that will play out, and which will hopefully ease the burden on some folks. And then hopefully we keep going, right? We keep having positive cycle develop here. But the other things we talked about really were so the positive drivers and the Fed. So we talked about all this stuff. We've been talking about some of that stuff, but I decided to kind of just formalize it last week rather than just kind of mentioning it verbally because with the new all-time highs being made, we have to really then think about this is maybe really legit. It's becoming more legit. And so why is this happening? What's out there? Because the way that the rally developed, a lot of people were questioning it. But hey, that's as we've often said, they tend to buy stocks and ask questions later. And then we said might not be easy this week, but usually solid in front of the U.S. holidays, and that played out again. Let's get to this week's, which I'm calling roll in slash roll them up because there's a couple references in there, but really, I think it's fitting because this market is rolling, and I think we should be rolling up because we're getting short-term overbought. That's really what that means. I think it's not dramatic in terms of overboughtness, but you're starting to creep into there. And I still have the Spidey sense thing happening, which I'll just jump to down here. Although I mentioned last year I had it and it really became a nothing burger. Which is rare for it, but it does happen that way. Usually when I get this sort of gut instinct that it's getting a little too easy and there's sort of like no clouds in the sky and everyone seems to really be thinking up and away. That's when I start feeling like we're heading towards that. When we head towards that phase, I start feeling like, uh-oh, there's something that's probably lurking or creeping out there that we're not maybe privy to. But maybe that's just me because I tend to be very risk focused and try to be disciplined about everything just from having learned the hard way that the other way is playing that game the other way can be really tough when you first get started. So I think you got to keep things buttoned down, learn to button them down, and then loosen them up at the right times rather than keep them really loose and then learn to button them up and so on and so forth. So anyway, little review time as usual, quick and dirty, really. We talked about last week, maybe there was a pullback that should happen or could happen, especially technicians wanting to see that you get above new all-time highs and where you broke out from, there's often a little bit of a pullback to that. And then you try to convert that former resistance into support and then hopefully launch again. That really didn't happen. You had a very minor pullback in some of a few of the major index ETFs, but it was just more of a hesitation, minor thing that happened on Monday and Tuesday. And then they got the holiday mode in play, and we went full rally sport fun pack. I think that's the quote from the movie into the holiday weekend. And that's so I think some of what we anticipated as a likely scenario ended up being close, fairly close. Anyway, the news cycle, I think it remains eerily dormant. So when you get lulled like this, right, do you return to vol, much like the discussion we had about consolidations, and then impulsive price action follows those, and low vol to high vol, right? That kind of stuff. We just talked about that. So maybe, right, we should be just keeping that in mind and not forgetting about it entirely. which really leads to this final current thought of be on guard if it keeps feeling like taking candy from a baby with black swans as a note, just because that's what I'm getting at. I don't really think you can trade on that in terms of, oh, I'm going to sit this one out, but I do think you can position manage with a little bit more discipline, maybe a little more aggressive rolling, especially now because we're officially in OB territory. If you're an RSI devotee, the I think the spiders are officially, overbought above the 70 threshold. I don't really go by that. It's just a general guideline for me. But it just when you get there, it's worth paying attention to, knowing it can become more overbought, and does quite often. But really, you don't get too far beyond, let's say, 80 in the SPY for too long. That's usually a good spot when it's ran that strongly to say, okay, I probably have captured that middle 80%, and it's time for me to do something. So let's get back to going line by line. So yeah, so the news cycle, a little concerning. So I'm asking, really just throwing it out there, Q2 EPS optimism turbo move, right? Do we do that and just keep jamming? Or into these EPS releases. And I discussed that in a webinar today. The only thing I think that, and I'm not by far from an earnings expert, but I'm my gut instincts are telling me that the way these guys have become such experts at it, and the way that the news media doesn't really turn a critical eye towards it, that the only way I really see problems developing with the way the market's responded, the market supposedly looking ahead and the price action really kind of confirming that of late, that to me would be surprising if these earnings turn out to be really poor. So the only thing that I could come up with a negative scenario is maybe they run too far and higher in front of those, and therefore like you get really good earnings, but you price all of it in, and then you get some sell-offs because they rug pull at that point, right? Sell on news effectively. So we'll see. I'm just throwing that out there, something to think about. But if the news remains light, I'm not sure what else is going to there would have to be, to me, there has to be a news development to really sidetrack this market in any meaningful way right now. I just the charts are looking very good, and you broke out to new all-time highs. So could you be on guard for that pullback to convert here on this line? Some claiming this rally was too top heavy, but buy now, worry about risk later. I already mentioned that, right? So that's really the name of the game. I'm not sure people worry about risk. Some people worry about risk at all. But yeah, buy now, worry about risk later. And many want this conversion to support because it's become more of a well-known thing these days. So a lot of the technical talk I see on X, people will reference things like that. But I think the more that people really want that or kind of demand it, or that's what they're waiting for, the harder it is to come by. So you can look at that however you'd like. But I think that if the news remains light, I really can't see what would develop that would be a problem unless we start seeing like a currency issue crop up, maybe like the Japan type thing we saw last year, with the developments there. I'm blanking the carry trade. I couldn't think of the expression, the carry trade issue that cropped up for a little bit there. Then things like that, right? Or just the black swan. But otherwise, I don't know why this would just suddenly get derailed. I think it obviously takes something, and that's really because of these positive drivers. You have so many positive drivers. We talked about these. I just enhanced them a little bit. We're just talking about July is usually fairly good. M2 is expanding from what we have seen still. The underpositioning paid trade remains to the upside. Corporate America is able to continue to pass on higher costs to people. All you have to do is go food shopping at your local market, and you'll see how ridiculous things are versus not too long ago. So a lot of things, some things have backed off, but right, they're going to try to keep those prices as elevated as possible. As long as people keep paying them, which people do, then they'll be able to do their thing. The Q2 EPS season excitement. The BBB, I've still heard from the folks that I follow. They're thinking there's going to be some monkey wrenching on that thing. They don't see it just happening as easily as it's presumed. But if it does, there's a lot of money that'll start sloshing around into the economy from that as well. So more liquidity usually, right, finds its way into the market somehow. At least some of it does, and then boom, 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 it supports stock prices. Rate cuts are also starting to be priced in, and the second half they're expecting to see a growth pickup, and it's usually good stuff, right, once you get into the fall. So you go through July, which can be good. You get the August, September, often not so wonderful. October, okay, Nov and Dex strong, so that's shaping up as of right now, unless we get derailed. The other thing I'm going to get into right now on the charts, we're going to cut right to the charts now. So let me just let me try to get this to work out so I can reposition here. And hopefully we can, there it is. Let me stop the share and let me, where am I? I got to move this out of the way here. Put that over there for now. And then I have to come back to the charts. I'll do my main screen here, screen number 3. And we're going to come back to this as well. But let me make sure where my PowerPoint is. So yeah, what I wanted to talk about, we'll come back to this because I'm going to go in order. But what I wanted to talk about, having a little bit of time, extra time here after the close, not much, but a little bit, because I've got to get to a few things. But the one thing I wanted to talk about are these mega caps. So I'm going to build our mega cap uh, combo here that we have been looking at from time to time. And we're going to do Google, we will do Meta, we will do Microsoft, we will do NVIDIA, we will do Netflix, we will do Tesla, as they say. And let me bring these charts up. And there you go on that. So it's not so much about the price levels here, but this is, if you're one of those SMA people, this thing is not only right. Not only did this thing make this recovery, like maybe lead the recovery, but you're just like with the major index ETFs, brand new all-time highs, right? Little pullback, probably. I think it was Tesla that was having trouble, but you're right back at it again. Keeps riding above the short-term SMAs. The SMAs are very close to being stacked. If we go up a little bit more, the 100 will jump above the 150, and you're going to be positively sloped on all of them and stacked from shortest to longest. And that's usually a profile that delivers better movement, right? It delivers very good bullish movement because everything's sort of working, right? Everyone's looking at this and it's like working, 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 working. You really can't poke holes at it. So technically, those as a package look ready to go. But what I'm going to do is go through some of these charts here, and you'll see, I think you'll agree with me that, and if Thinkorswim is doing this to me, why it won't jump over to the right and just stay there, I don't know. So that we can, and I'm not really going to get into these prices too much, but now this is Apple, and let me just make a switch here. Apple was, Ryan and I we talked about it. We were really, unfortunately, we were really close to adding it to. We had it in, I think, UOA Essential, which is good for the folks that trade the basic UOA class, and the pros that trade it too. But we were tossing this one around as a possible idea of the week, and because we were worried it could get just kind of remain dormant. It looked good to me, but we thought, well, in the end, maybe if this remains dormant as it has, it could really be a dud. So we went back with NVIDIA, thinking that if there was a pullback, the way that NVIDIA had shot up, we would get a pullback out of it. And if we didn't get a pullback out of it, it would keep powering. So it kind of did a little bit of both. So it dropped down decently for a little early week sort of swoon that you could have traded, and then it came back pretty strongly for a nice little pop after that. But I was regretting that we didn't put Apple in the mix, but at least we had it in UOA Essential, just because it's easier for folks that are newer to trade in one direction. A lot of those folks have not really gotten to the point where they're comfortable flipping back and forth when the market weather vanes shift. So if you look at, I'm sorry, I meant to go to Apple again, so my apologies. But if you look, I think, you know what I think I'm going to do? This might just make it easier because this, they're fighting with me. It's fighting with me here, and I'm getting a little frustrated with how it's going to give me that hard time on every chart I pull up. So this is a weekly chart in Apple. And you can see, right, this is a very large name. It's not the largest market cap any longer, but it's a very large name, as a lot of you know. And to me, right, there's an easy trend line draw somewhere in that vicinity, but you are close to a breakout after consolidating in a triangle for many weeks, right, for several months. So there's some stored energy that's now turning into, I guess, kinetic energy. You could say it that way, maybe. And look, there's a lot of lag behind the all-time high, and the market's just made new all-time highs. So there's a massive discount here. Now, I don't know anything about what's going on at Apple in terms of the fundamentals. Okay, so don't read into that from me. Like if you like the fundamentals, great. That's you probably know more about them than I do. I just don't even spend time on these things. If I had the time, I'd probably spend some time on them, but I just rely on the charts way more than I ever do fundamentals, except for, investing. I mean, for trading, just to be clear. So anyway, look, this thing broke out from there. It's from that one line. It's almost breaking out from here. If this breaks out and starts participating, it's a massive weight. And so this is going to help propel the market, right? If you look at Amazon, this is a weekly chart, remember, because I'm trying to show big picture. This is still about 20 bucks off the high, right? So this could easily, if this market continues to go, this thing continues to perform, it's not overbought, right? These stocks are not overbought right now, by the way. So these are stocks that could easily go back and try to get at least closer to the high, and they're both very large weights. I think Meta, well, I skipped over Google, so my bad. Let me go back to Google. And there's Google. It's another one. It's another one that's the other one I wanted to cover. It's far off of the high still. I mean, it's not, it doesn't look like it, but it's a decent amount of per share price, right? Share price to off the high. So that's got run if they want to come after one of the megas that's still, let's say, technically undervalued. There's that, right? Now the other and we already saw that the whole package is working well. Right? We already looked at the chart of the whole thing, and that's acting very bullishly. Here's Meta, and this just made a new all-time high. So that's not even really overbought either, right? That is not overbought. Microsoft might be. Let me see. Microsoft is overbought, but Microsoft made a new all-time high, right? So this thing just, right, I'm glad we had this in the services because it just blew through everything. It might have been the one of the easiest longer term verticals that it's like $20, $30 vertical that you could just wait on and probably max out the way that they've gotten their hands on that. So you have that as well, and that looks really good. And what can you say other than it's overbought? You really can't say much about it. It would need to fall off. There might be a dovetailing here on this large, bigger picture chart where if we put a flat line right near here, if I can get it to cooperate right near there, okay, 473, and then I put a regular support line, trend line underneath here, we might get a dovetail effect where it tells us that the problem lies at just about the same point so that if you break it, yep, and you do have that. I mean, I think it's pretty clear where they're both kind of there. So if you get that right in that vicinity of 470, you fall below there, you could be inviting a more significant pullback. But until you crack there, the way that this market's acting, that looks really good. We have Nvidia, which just made a new all-time high, I believe. Yes, and that to me, right after what it's done here with this wide, bigger picture double bottom that it has, an imperfect situation where it actually, which you love to see, where it surpassed the prior low, probably cleared out a lot of people as a result that are maybe longer term players on this weekly. And now it's back again doing NVIDIA things. despite many asking questions about things there. But remember, buy shares or calls now, ask questions about risk later is the way things tend to work in the modern game. Maybe they always have worked that way, but I, of course, not. I'm not a time traveler, so I can't say. But yeah, anyway, I mean, this to me looks like it's a little bit on the overbought in the short term. So I'm going to say that maybe your daily's a little overbought, but really, to me, it's got room to run. And after this corrective phase, and it's breaking out. So to me, like it's got room there. So again, you all know what kind of a weight this is. You've got, oops, I did made a mistake there. Let's see if I can just fix it easily. There's Netflix, another one that we've charted, new all-time high, right? Like you want to complain about it, you can, but it's not really that overbought on it. It's not even close to overbought on the daily, and it's kind of just getting there on the weekly. So again, my concern would be if you want to look at the half empty, my concern would be that they run this stuff too much so that the maybe really good earnings are not received well. Maybe. I'm just throwing that out there. And if everyone probably knows that Tesla's the problem child due to all the Elon stuff that's happened this year, or what have you, or the various Elon dust ups and I guess vandalism against Tesla and how that maybe shift perceptions or whatever the case may be. So there's that. But other than that, I mean, everything pretty much looks really good in mega cap land. If we add in some names like Avgo, I'm going to look at Avgo. We already looked at Netflix. I think I had that on our slide just because it really isn't the biggest ones, but we've just traditionally looked at it. Look at this. I mean, new all-time high, right? You've got Morgan, JP Morgan, new all-time high. We had this as a name this week. I think maybe even a couple ways recently, because I do recall having some UOA on that. So this stuff is just this stuff is absolutely powerhousing higher. And the other one, yeah, so I covered them all. So you could say, well, I guess you could say, well, I have a problem with this, that, or the other thing, but and you might be right. You're a lot more right, I think, if you say, well, Morgan's overbought at this point, and it is. There's no question. I think it's over 80 on your daily RSI, but it's got the driver coming up, right? So if they want to have some more fun in front of it, it could certainly become more overbought. But that would be my way of sort of saying, like, think about that scenario we're talking about. But those mega caps, they look really, really good as a package, and most of them look really good. And Amazon, Apple, um, and Google all have a bunch of catch-up potential. In other words, like to me, like I refer to as being technically undervalued because they're not performing as well as the other names are. So if they get their hands on those and they go, you really have something there that could, those names with the weights that they carry could really power things. So we talked about that. We talked about that. So in the nutshell, where are we, right? News neutral assumption, most likely scenario, where are we? That's what we're going to cover in this section. So we're overbought in the short term, but the charts look very good overall, as you just saw. The positive holiday performance played out. The breakout attempt that's been underway since last week, they really extended the death grip on bears. But we are approaching, in my opinion, it's getting too easy. So let me bring in my trusty sidekick. No, I'm going to just bring in some tabs for the first time in a while, and you can go check this out. It's on Zero Hedge about productivity gains. And I didn't even go looking around for this. Some of you might think, oh, Wayne's trying to reinforce what he said, but this just popped up on Twitter, and I'm like, it kind of a little uncanny because I think for the past couple of weeks prior to this one, we talked about it, just said, this could maybe really be kicking in. And so, according to this survey from back in December, I don't know why they got their hands on it now. I really don't know the background story, but you can just go take a look at this and you can see how AI is really dramatically increasing productivity. And I think my comments where we talked about it a few years ago, maybe like 2 to 2.5 years ago, and something like that is my recollection. And my take at the time was that, yeah, sure, you can't argue with it, but it does take a little while for this stuff to kick in. I don't know if you just start buying everything, willy-nilly at that point in time. But certainly, right, if this trend accelerates, which you would think, right, under normal circumstances it will, you could see this is a really dramatic pickup, or you could look at it as a time saving. So Stanford University, World Bank, take the source material for whatever however you'd like to. But so there you go. So that was we were discussing that, but maybe more importantly. And that's, by the way, if you didn't watch those videos, the reason I brought that up is just because it's really more about, like, even if the economy doesn't look great, this could really help companies look great, right? So their EPS could be greater, right? So without really a roaring economy, thanks to this. And then if you do get a roaring economy, it could really be obviously very even more explosive. But just wanted to mention, didn't know this when I started spouting off before I put my slide together, but I started getting the sense it was getting too easy, and I didn't realize it, but we now have made it back to extreme greed. So you could see that, I guess we weren't there with the previous close, and we certainly weren't there last week or the month before, but now we had a real jump with what they've done here. So I think you have to be a little concerned about that. Not super concerned yet, but just a little concerned. And you could see this, the AAII I've got here for us too. We haven't talked about these for a very long time, probably since you got near these lows. It's been a few months, I think. It's my recollection. Anyway, maybe even longer. But you could see that this is really the highest reading that we have in terms of bullishness, right? In the sentiment survey, really all year long, the highest one. So just keep that in mind. I don't delve into this unless I think well, usually if there's more time for to separate the videos, I will, but I think it's worth noting this week is my point. That's why I'm bringing it up. So there's that. That is not what I wanted. Let me just don't need to flash that up there. What happened to my PowerPoint? I thought it was right behind that. That's weird. Oh, my bad. Let's bring it back. So I wanted to cover that stuff. Yeah, so sorry about that. Anyway, so that leaves us with that leaves us with this. We talked about that. These powerful patterns are still there and some are fiery, right? So I think you can't forget. I highlighted the Trump trade deal volatility, right? Because some of these deadlines are coming up, and you've got the Independence Day, and I think we had some terror events near Independence Day before, so just be on guard. Certainly be on guard next week, especially because, as I say, if it keeps feeling like you're taking candy from a baby, look for a few more sessions the way it got here on Thursday and Friday for the better part of those sessions. I'm sorry, Wednesday and Thursday I meant. The reason I said that. But yeah, so that's it. The last 2 days of the week, that's what you have to be, I think. Like this is getting too easy. Um, so, oh yeah, so sectors and breadth are really good. We'll look at that. And as I noted, right, these are, if you want to quibble, you could say, well, some of these defensive sectors and XTN are not really there, but XTN had a good week. And these are maybe trading positively, and that would be a concern normally, but it could be also because of the way things are developing in the world of international finance as well, along with crypto. And the crypto, to me, like BTC, Bitcoin is nearing the starting line. So let's finish this whole section before I go to the charts. These all remain intact, right? So, and like I said, plenty of positive drivers. All the trends, short, intermediate, long, remain intact. And bottom line is that the Fed is apparently right. If they do start to cut, that only helps matters, maybe not immediately, but just market psychology wise it probably helps people, even if it's short term. The news comes out, there's a spike, people sell into it because it was anticipated to sell on news after the spike. But after things settle out, I mean, you probably have a positive. That's probably a positive. Looked at positively. Spidey sense is still there, and then again, the taking candy from a baby reminder. So let me bring over, because we covered everything. I'll just bring over the sectors that we generally look at, and I'm just going to note, right, just by going through them, that energy kind of got itself together again after putting in a higher low, right? So I don't want to belabor this stuff, but that's an important sector. So this intermediate uptrend is still intact. You got new all-time highs in the leadership sectors, XLK, XLC. You have a critical sector like financials making a new all-time high. Couple defensive names in here, XLRE, XLV, nothing special. If you're bullish, right, you probably don't hate to see that if you're just a general market bull. Your staples, decent week, right? No question about it, but they didn't break out. But XLY is trying to, right? Discretionary, which again, that's a good sign, which means that, right, people are looking at discretionary spending likely to be better. Maybe we're anticipating it will be better. And then you can quibble again and say, well, the transports are still well off their highs, and they are. But this intermediate trend in there has it's been resilient, excuse me, and it really took a nice leap this week, and it's the uptrend just is intact. It just is, right? So this could start working its way back towards the highs of last year, but it's not too far away, right? With a couple more good weeks, it could be not too far away from this year's high that was made earlier in the year. And then kind of like I call them the Dow sectors, but your XLI, your XLB, basic materials and industrials, I look at that, right? These are great weeks. We had some really nice paper in some of them as well. And XLU, again, I've kind of conceded that I'm not even sure how to interpret this as a defensive play, as an offensive play. What's going on there? Maybe the market itself doesn't know. Look how neutral the action's been now for the last couple of months there. But in all seriousness, probably if you get the higher energy demand, that's probably a good thing. So if this starts breaking out, that would be good. But as I did note, we can take a look. Where's my other chart? There, that should be there. Is that it? Okay. So what we could do is look at a couple other things here, and for starters, I'll look at XAU. Why the X didn't go, I don't know. But we had some more paper in here. This is also on the verge of maybe breaking out. You can see that high is not far from here. It's sort of working its way back up after a nice little pullback, and it's back above all the SMAs again, right? This is the same thing can be said here in SLV, and the same thing I think can be said in GLD when I last looked at it. Oh, I looked at it yesterday. I thought it was going to be higher today, and it wasn't. So maybe you're a little bit down there. So this could easily right the ship and be about above the recent high and all the SMEs with one decent little push. But SLV, XAU, they both look pretty good. Like they're trying. And in fact, BTC looks like it's approaching the starting line again as well after consolidating and frustrating people for maybe over a month. Um, but you get sort of the double bottom. I love that second lower bottom, which often is a good clean out of speculators. They bring it back up. They frustrate people. It's not going. It's not going. Now they're working it up, towards maybe the highs, and there could be another breakout attempt looming. And that would effectively be, right, if it does happen, you'd have almost a 2.5 month I'm sorry, a 2 month to consolidation, not a super short one, and that would be potentially very interesting and sort of give you that cup and handle-ish look as well that could launch things. So that looking, let's say, poised, if not primed. I don't know. I don't know what you would prefer, but all that stuff looks really good. And then if you come over and look at where's my getting tired. I have to admit it, getting tired. Must be here. Yeah, there you go. Well, let's get out of BTC. I just do this so no one's confusing any of these breadth indicators with like that it's for crypto. It's for equities, it's for the market, SPY. But you can see that these are all looking really good again. I mean, you just had a new leap and new highs that you haven't seen. Let me try to expand that one for us. right? This goes all the way back. Wow. Like this is getting back there. So let's add a little more time because this is the big leap in new high, new low. Let's see if I can go back a full year and get the data and then see how we have to maybe go to. So yeah, you have to go to last year to improve upon this. So it's no, what you're seeing is no mirage. I think last week, right, I just said like people start worrying about it's too top heavy. There's just two big ones leading, but it doesn't to me like I get that, but that's more if other things aren't following along, that can be a problem. Or if it's late in the game after you've had a big run and they're putting one final surge together and a lot of other stocks are not participating, in fact, might be going the other way and they're just doing everything through the magic of heavyweight names, then I think you have to pay attention to that. But to me, like this is not a stage where that, let's say, initially narrow leadership is a big problem because they often come after the big dogs. And there's a reason why they're the big dogs, right? So it's just more or less the way that things play out a lot. And then they start dragging everything else along. And I don't know if I said that the last couple of weeks. If I didn't, I'm glad I did this week. If I did, I'm glad I did then too, only because um, that you could see with the sectors, you could see you could see with the sectors that look how the things are getting a lot of other things are getting pulled along now. So yeah, the megas may have really started to lead the charge back up. Maybe they're what helped drive those new all-time highs the last couple of weeks, but you could see a lot of other things are going for the ride. It's not just them. So I think that looks really good. Let me think if there's anything else I can mention. Oh, I know what I wanted to mention. Just the four lot. Here it is. Let me pull this over. Here's my, I guess I have to take, I think because I'm just running out of memory thanks to Thinkorswim and all that. I've got, so here's the four major index ETFs. And you've got the new all-time high, the new all-time high, the massive move here in the diamonds. I don't know if they made a new all-time high. I don't think they did. Let's double check it though. Nope, you're still a little shy, but you could happen. And then IWM, right, which I wanted to talk about. It's one reason I'm glad I brought this up. That got through the 200, held, and they pushed it. So we had a trade in there. I think we talked about that one. So hopefully some folks are doing well in that one because that was one we were targeting from last week. I was a little disappointed. I was in IonQ. I made some adjustments to a couple of the quantum trades that I've got on. Um, but I didn't get enough out of them. They weren't to my liking, the performance this week, right? It's just I thought they were going to do a little bit better. I got myself into Rigetti. Um, you know, you can't complain if it's working out, right? I initially sold IonQ when it popped, and then bought it when it dropped. I bought some calls again, but I thought it was going to break out. I then I started seeing some early signs of shenanigans. I sold what I had, bought again, and all that. But yeah, I really thought that looked interesting, looked good, and thought there'd be a little more follow through. So hopefully there will be next week. But I just wanted to mention a few names we talked about. We already talked about, right, for next week. I would keep your eyes on Amazon. I'd keep your eyes on Apple, and I'd keep your eyes on Google in terms of the megas that we talked about because if you can if you can get keep your eyes on those and this market continues to go, I think they're going to try to lift them. I feel like they're going to try to lift them. Here's the same similar type pattern, I should say, right in quantum. It's the cup and handle, right, that's there. So this could be interesting if we do get some further bullish action next week. Let me try to give you some targets before I wrap up. I'm sorry to make this longer, but if I notice that I haven't covered targets, I think I'm just running out of steam, steam at this point. It's been a long, short week, put it that way. And my voice is getting really a little beaten up here. Let's go to, we're going to have to do a projection here. And so I'll do that. And then, you know, I'll probably leave the support levels to everyone with regards to the SMAs, but we can at least get some projections here. And then hopefully that'll help you out if you're trading, because I know a lot of people like to see where this can go. But this is very powerful right now. I do think news is what's going to be required to derail this thing. So let's take a look at the 575.60. I'm off too much there. And then let's get what's this high? This is a high of 605.06. Come on. 605.06. And then the low here is 591.89. All right. Get that one in there. And then this should give us accurate numbers. Yep. So your next levels are those two fibs up there. 629.36 is one of them. So that's less than a percent away. And then 639.56. So I think that's sufficient. You're talking about what would that be? About 14. So yep, as often it's usually near 2.5% that we work with. And I would say the 75% retracement to 614 would be a first level of support, and then your 10-day, 15, 20, and then former, kind of like former top here would be right in the mix as well. So I'll let you just fish them out because I know everyone hates when these videos drag on. But well, I shouldn't say everyone, but a lot of people apparently do. But it's just not that easy to cover all this stuff, for me at least, especially spur of the moment. So yeah, I think I'd go back to this, and then I'm going to go to there, and they probably have blown through this. I hate to. We might. Well, no, it might be similar. So, and on top of it, Thinkorswim is really bogging down. As I often say, when I get Zoom, when I get my browser combined with Zoom, combined with Thinkorswim, for some reason, my installation of my installation of Windows, whatever I have Windows, the corporate or whatever they call it, I forget. 505.58. No, not enterprise. I forget which one I've got. But yeah, they for some reason the Windows install is just not right. And I've been on with Microsoft many times over it, and I just can't get good performance, and no one understands why. And then I've done reinstalls and everything, and 536.78. And I'm kind of getting to the point where for the first time since I was a college student, I might just go by the latest greatest uh, Apple. My oh boy, it disappeared on me there. I don't think it took my wow. This is frustrating. I might have to wrap it up on this one. I don't want to drag this on too long. This is really getting to be tough that they're giving me this. So 505.58. It didn't save that one. Not even sure what happened there, by the way. And then I've got to come down to this low. That's going to be 523.65, 523.65. And then middle point is 536.78. Okay, so let's see if we can get some numbers here on the Qs. I better just finish it and not. So yeah, your 563.34, right? So that's going to be that your next one, then 574.13. That would be my next target for those. I think the 10-day where it's coming in is going to be right near the former low. I think it's close enough that you just use it. I think you use the 10-day at 543.94. So those are my first couple of levels, and you could see where other fib levels and SMAs line up, as well. So I'll just keep moving along for the things that people may trade or want to know about. This one we don't need to put any projections on because we have former price action. We still could. There's nothing wrong with that. I'm just going to rely on the former price action is where this is likely to get bogged down. So just bear with me and I'll work my way up from where we are. Um, let's see. I think you have to come up to here. I think you have to come up to about there. So well, you may as well just call it 225 and just to throw a round number out there because you could probably argue. So 225, not much higher. And then after that, you've got to come up, I think, to where those levels where it really struggled and hesitated, and that's going to be 226.55. That'll be your next one on the upside, and then finally up near all this stuff is really where you gotta right below, well, right, let's call it 229. I think, well, 230. It's actually 230. We'll just call it 230 to round these numbers off because I don't try to pretend that, you can. I've had a couple, over the years, of course, where you do actually get the exact number, but right, it just trying to get down to that last tick is pretty tough, and I don't know if it's worth it. So I think you have to go start here with your 451.55 on those. And then where would you go? The next part has to be projection, so which we'll take care of, and then we're going to wrap up. We'll go from there. Here's my, yeah, and I can't get the AI to code everything for me the way that I want so I can switch over to trading view because I've got too many on other screens that are not visible because there's so much junk on them that just are things that I like to reference when I need to try to find the best ideas and look at little facets that are just not just kind of difference making facets that sometimes really tell a story. I don't like to get rid of that data so I don't have to reference it all the time, but I just don't like to get rid of it. So it sits on other screens. It might be me just being guilty of overtaxing Thinkorswim with all the calculations that are going on. And even though I really did like tone down my setup a lot because I probably am ridiculous about it, but I like having things like I say, in certain situations, I like to go to certain things that have helped me, that make differences and help me make the decisions. And um, I probably have too many calculations running. Oops. So it's not like I'm an innocent party to all this. All right, so we did reach the 161.8. So wow, what do you do from there? There's really not much to work with there. I hate to say it, 467.35 is your next one. There's really nothing I don't think there's anything between there. So you got the 451-ish, right? You got the 451 over here for at the former all-time high. Boy, it's really slow. 451.55, and then you've got the 467. So that's another 3%, 3.5% that you would pop through the all-time high, which, it seems like a lot, but it's not really. Um, what else could I do? Well, let's see if anything shows up. There's one more attempt we can make to see if we can get another workable target for this. It's probably wasting time, so tune out now if it is for you. It's the last thing I'm going to do other than wish everyone a good holiday. But the only other thing I could do, and I'm just going to leave it as a ballpark figure. Yep, there's something at 464, 465, probably. So I'm not even going to bother going into the details on that because it doesn't separate enough to give you more of a precise number. There's just nothing there. So I think the two levels, 465 to 467 in that range, and the 451 are what you're going to have to use. As far as backing off, I think if you backed off, let's see, probably former high right there. Couple hesitations, support, probably 443 would be the first level down on a pullback, and then probably going to defer to the 10-day at that point, or the rising 10-day, which is a 436-ish. And I think that's it. So on that note, I'm going to wish everyone another wish, so safe and happy and fun and long holiday weekend. And I hope that something that I shared with you in this video helps you out in the upcoming week or some week in the future. And as always, thanks for tuning in. To everyone, take care.